loan repayment, what will happen? Think.
Liability
Cash
increase.
Liability
Increase.
no, wrong.
cash decrease by 15,000.
Correct. Cash decrease by 15,000. Cash you are paying to the bank. Then
Equity increase by 5,000.
incorrect. Equity decrease by 5,000. Why? Loan interest is an expense. Loan interest is an expense. So the liability will come down only by 10,000. That is the bank loan. Right? See, these are the special transaction. Right? The examiner can test from you. These are special. Right? So when you make the repayment, when you repay the bank loan, that's having two payments. One is the interest. Interest is an expense. The other one is the capital repayment. Capital repayment is a liability reduction. Right? Understood it?
Yes, sir.
Very good.
Yes, sir.
This is the last question for the chapter. This is the last question for this chapter. We will finish this accounting equation and we'll go to another section. We are running out of time. So this is another last example. You must practice this at home. Huh? Right. You are given the impact of the five transactions to the accounting equation of a sole proprietorship as follows. They have given five transactions. Identify the possible transaction. So easy, not much hard. Identify the possible transaction that took place for each line item 1 to 5 of the above accounting equation. Just think. Number 1. Cash increased by 2 million. Equity increased by 2 million. What is the transaction?
Only invested 2 million.
Very good. Owner owner's investment in cash 2 million. Very good. Number 2. Furniture and fittings increases. That means we have purchased it. Cash has come down only by 150. Creditor liability has increased by 600,000. Think. Think.
Obtain a loan.
Complete. Just try to complete.
Purchase of 7,500 7,500 value furniture on 6,000 on credit basis.
Half is correct. Purchase of furniture 750,000. How do you have make the payment? Cash paid only 150. Balance is on credit. See, the credit has increased 600. You have paid only the cash 150. So this is purchase of furniture. Purchase of furniture 750,000. Paid cash only 150,000. Balance on credit basis. Understood, Apsara?
Yes, sir.
Very good. Number 3. Look at the number 3 and try. Inventory increases, creditor increases.
Purchase good of 3,000 at credit basis.
Very good. Purchase of stocks on credit basis Rs 300,000. Very good. Number 4. Apsara, try. Cash come down, credit come down. Think, Apsara.
Paid a loan.
Here it's not a loan. They say creditor, trade creditor. See here, the top say they say liability, under that they say trade creditor. Then you must, what is it? Pay to whom?
Creditor.
Cash paid to creditors is 450,000. Then number 5, the last. Inventory come down, debtors increase, equity increase. Try both. Naveen? Stocks going out 145. Apsara, stocks going out 145. So 145 stocks you are selling at which price?
Sold of 145,000 goods on 180,000 on credit basis.
Very good. Rupees 145,000 cost of stocks. Stocks were sold for 180,000 on credit basis. Very good. Here you're having a profit of how much? 35,000. Right? Here you're having a profit of 35,000. So with that, I'll be finishing the first section. That is the introduction part, yesterday discussion and today discussion together, accounting equation. Then we'll move to the another heading that is double entry system. And prime entry books. This is one of the another big section that will be tested in every year. So we'll discuss on this one. Double entry system and prime entry books. So here I must explain two things first. One is the double entry system. So this means every transaction has two impact on where such impact need to be recorded in debit and credit, right? So all the transactions and events having two-way impact. So one is the one impact you will write somewhere in a debit, Another impact will write another place in credit. So what is this debit and credit mean? So this is the ledger account. See here. This is the ledger account. We'll say, for example, cash account. Cash, or we'll say land account. Land account. This is the example of a ledger account. So we will draw a lot of ledger accounts. Right? This is example of ledger accounts having two sides. You can see here the left side is called debit side. The ledger account left side is called, this is debit, right? Debit side. Then the right side is called credit side, right? So if anybody asks what is the meaning of debit, you can say it's the left side. If anybody asks what is the meaning of the credit, you can say it's the right side of the T account. This is called T account. This is called what? T accounts, right? We are having two sides in a T account. This is called T account, right? For all the transaction and event, there is a two-way impact. So that two-way impact, one time you write in one place as the debit, another time you write in another place as the credit. So that's why everywhere the debit should be equal to the credit. Everywhere the debit will be equal to the credit. This is the general format of a ledger account, right? Right. For example, we'll say here even the accounting equation we learn, all the transaction there is a two-way impact. That two-way impact may be asset, maybe asset liability, maybe liability and the equity, maybe asset and liability, or the mix of it. So those impact you need to write in two place. One is as the debit, in another place as what? Credit. Right? We'll learn the double entry system in detail. See here, this is another bigger heading, huh? Right. So we have learned basic accounting equation. Assets equal liabilities plus capital. Right? So here we have adjusted for transaction to the capital. We have already done it. We have already learned it. Right? If you draw a T accounts like this, then I had. Yeah, right? This is the ledger account format. Right. So you can see here, this is a positive figure. This is the debit side. This is the credit side. This is the credit. So you can see here, asset is increases, it's on the debit. Liability increases and the capital increases is on the credit. So if you expand the same here, assets equal the same, we can expand. Liabilities plus capital, and we have learned two more, plus income minus what we did for the expense, it's minus expense. Now see here, very important, huh? Very, very important. Right. So this is plus, this is plus, this is plus, capital is plus, income is plus, but expense is minus. To create it plus, I will take it to the other side. Then here, assets plus expense, right, equal liabilities plus capital plus income. Right. See here. This is plus, assets plus, expense plus, then liabilities plus capital plus income plus. If you need to deduct it, minus it, what should you do? What you should do? If you need to minus it, basically you need to take it to the other side. See here, if you wanted to minus it, you should take it to the other side. See, now if you need to deduct, minus it, basically you need to take it to the other side, right? So you can see assets and expense accounts. Now see, assets and expense accounts are having debit balances and increase will be debited. Double entry system. Liability capital income accounts are having credit balance and increase will be credit. Credit mean you record on the credit side. If you need to minus it, basically you must take it to the other side. If you need to minus it, easily you need to take it to the other side, right? So here you take it minus figure, here you take it other minus figure. So easy. Right? To minus, you take it to the other side. Right? We'll write the proper double entry system, type of account. We have 4 type of account, increase and balance. Increase and balance, then decrease. Decrease. So we have 4 type of accounts, assets, expense, liabilities, income, capital. Right. Increase in assets and expense, what we do? Increase in assets and expense, what we do? We do what? Debit. Increase in assets and expense, we do debit. Then decrease, what we do? We do credit. We do credit. Then increase in liability, capital and income, what we do? We do here credit. We do credit here, and the decrease will be debit. This is the double entry system. Apsara, understood?
Yes, sir.
Right, Naveen, understood?
Yes, sir.
Right, we'll do a small working. Right, we have written here few type of accounts. If it's cash in hand asset, which balance you should expect?
Increase.
Which balance are you expecting? Debit or credit?
Debit.
Debit, so easy. Then cash in at bank, again asset. Which balance are you expect?
Debit.
Debit.
Debit. Then purchases is an expense. Which balance are you expect?
Credit.
Wrong. See, it's wrong. Assets and expense increasing having which balances? Debit, huh? Then the other 3 having credit balances. Liability, capital, income having credit balances. Right. Then sales is income. Which balance are you expect?
Credit.
Huh?
Credit.
Credit. Then traveling and transport expense, which balance are you expect?
Debit.
Debit. When you hear the type of account, when you hear any type of account, whatever the account name, then you should be able to guess which balance is it having. Salaries, which balance is it having?
Debit.
Debit. Salary expense having debit. Very good. Then stocks.
Credit.
Debit.
Debit. Very good. It's asset. Debit. Land and building. Land and building.
Debit. Debit.
Debit.
Debit. So easy. Debtors.
Debit.
Debit. Debtors. Debit. Right. Then we'll write few examples for the double entries. Right. This is the key. Key to success. Right. Example. Owners investment in cash 50,000. Now you need to think the double entry. So owner's investment in cash 50,000 mean what's coming in?
Cash.
Cash. Now see, cash increases. Cash increases means asset, what's happening? I'm using the plus for the increase. Cash increases mean asset increases. Asset increases, what we do? Asset increases, what we do? Naveen? Asset increases, what we do?
Debit.
Debit, debit. Asset increases, debit. DEBIT, debit. Then see the double entry. Cash account, debit. Then other impact. When owner invests cash, we receive cash. Cash increases one side. What is the other impact? Capital?
Increase.
Capital increases means it's what? Capital increase mean debit
Credit.
or credit?
Credit.
Credit.
Credit. Now see, credit mean capital account. Credit. Right? If you draw two accounts here, I will show the example. So this is one of the account, that is cash. Cash account. If you open a cash account, this is the cash account. You will write here capital. In the debit side, we'll say 50,000. Then you must open another account, that is for the capital account. You must open another account, capital. You will credit there, not the debit, cash. How much? 50,000. Was it understood to you,
Yes,
sir.
sir.
Apsara?
Yes, sir.
Very good. Then we'll take one more example. Cash received from debtors RS 5,000. Now think double entry. What's coming in? Cash
Cash increases.
increases means assets increases. Clear? Cash increases mean asset increases. What we do for the cash increase, asset increases?
Debit.
Very good. Debit. Then the cash account debit. What is the other impact? Now think.
Debtors account credit.
Very good. Debtors come down. Debtors come down means assets come down. Asset come down is credit. It's credit. So then the debtors account credit. See, this is the way we will write the double entry. When you hear a transaction, you should be able to write lot of double entries. If you are good at in the double entries, then your accounting section is done. Right? The accounting section is easily done. Then only left is the business study section that easily we can manage with the theory part, not hard. Right? So we'll take one more. Credit purchase. Credit purchase 10,000. Think. Purchase increase means expense. Purchase is expense. Expense increases. Now see, purchase increases mean expense increases. Expense increases, what we do?
Debit.
Debit. Then the purchase account. Purchase account debit. DR mean debit. Then you are purchasing on credit mean creditors increases. That mean liability. Liabilities increases. Right? Then the liability increases, what we do?
Credit.
Credit. Creditors account. Creditors account credit. So you can write DR mean debit, CR mean credit in everywhere. That is everywhere, everyone is accepted. Then we'll write one more. Cash sales. Think. Cash increases means assets increases. Am I correct?
Yes.
Yes. That is debit. Cash account debit. Sales increases means it's an income. Sales increases means income increases. Income increases, what we do?
Credit.
Credit. Very good. Credit. So then the sales account credit. Understood?
Yes.
Okay.
Right. So likewise, so I'll be giving a lot of transaction on the next day, right? Next day, I will be giving a lot of transaction for you to write the double entries, right? Revisit on these all the notes that we covered today, right? Don't be lazy. Put the maximum effort. Put the best effort, right? Put the best effort on learning all these. Very important. Without knowing these, you can't pass the O level, right? It's very hard. Put the maximum effort, right? We will be practicing all the papers, minimum of 5 papers, right? I'll be covering here and there questions. And in the class, only I have done these questions. You need to revisit all these questions and work it out, right? Yesterday I have shared you the PDF version. I think you have received it. You got it, no?
Yes, sir.
Right. Today also I'll be sharing the PDF version of these. Right? Take a printout, go through again, put the maximum effort. Anything to clarify, drop me a message. I am there in the WhatsApp. Anytime you can call me and ask me anything to clarify. I'll be helping you. Right? So we will finish it for the day. We will meet on the, I think they have fixed only for the Sunday and Tuesday, no? Sorry, Monday and Tuesday, I think so. Apsara, they have fixed for the 2 days, no?
Yeah, I think so.
Okay. Anything related to my class will be message here, right? I'll put my maximum effort to cover all things and I'll make sure that you are getting A for the subject, right? I'll be sharing this. Then anything to clarify for the day, Apsara, Naveen?
No,
No,
sir.
sir.
Okay, then thank you. We'll meet on next day.
Thank you, sir.
Welcome.
Good night.
Right. Okay. Thank you. Good night.
Good night.
Okay.